Crypto markets have been range bound after spiking last week on softer regulation from the Biden administration. On-chain metrics reveal some ammunition for weakness in the short term, should markets capitulate lower. And crypto vols creep higher, despite realized vol coming in low. All this and more in this week's Crypto Insight. So crypto markets this week, Bitcoin, it's kind of been coiling, right? Coiling in a tighter and tighter range. So, we had a pop sort of earlier in the week, and that was on the back of the Biden administration coming in more friendly than expected on crypto assets, wanting the US to be a leader, talking about innovation, blah, 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 not really wanting to stifle that growth in that area. So that was good. And the market had a pop, about 5,000 point pop in Bitcoin to 42,500. But then prices have then faded again with risk assets and the fact that a more aggressive Fed is being priced in, which, and that kind of monetary policy shift is something that maybe isn't great for crypto because less cheap money, less easy money, that type thing. Where's the demand going to come from to buy more crypto? Okay. So I think that's really the two things that have been going on. But as you can see from the price action, it's kind of coiling into this tighter and tighter range, basically, right? And we know that when it does that, often you get a breakout of that range and you get a move. And I suspect FOMC is going to be that, right? It's going to be that catalyst for us to break out of that range because it's getting so narrow. Okay. Another thing to keep on the radar is that EU Parliament voted today. I don't know I haven't seen the result of it, right? But voted today on MiCA, right? Which is a MiCA bill, which is markets in crypto assets, right? And what they're basically talking about is there's a clause in there that says by 2025, they want to ban trading on like proof of work blockchains, right? Because they're not sustainable in terms of environmental impacts and stuff like that. So that might dent sentiment a bit in crypto if that passes. But the truth is, it's unlikely to be too dramatic an impact because there's plenty of time for blockchains to evolve to proof of stake if that's what they need to do, right? That's the great thing about crypto. It's always evolving. Look at what happened with the China ban. It moved on, bothered about China now. Same thing with this, right? If it has to move on, it has to evolve. I think it can do. So I don't think it's a massive game changer for it. And also the rules won't come in for quite a long time. So there'll be plenty of, and they might even get reversed or kind of watered back down, right? If there's enough lobbying and things like that. So there's lots to play for there. In terms of ETH, right? The ETH Bitcoin spread, like I've said recently, it's been pretty range bound, hasn't been doing much, pretty uneventful. Looking at the chart, it does seem to be finding a bit of a base down here, which means if that is a base forming, then on the upside, we might get some outperformance as the spread rallies. But for now, there's no real catalyst to see that, right? I still want to see this downtrend kind of broken before getting overly excited about ETH outperformance. Okay. Looking at on-chain metrics this week, key takeaways for me have been this accumulation trend score. So this is a new indicator that Glassnode have kind of put out. And they're trying to kind of gauge whether people are accumulating Bitcoin and what percentage of their stack they're buying, basically. And that seems to have been weakening due to recent macro and geopolitical uncertainty. Also, if you look over to the chart on the right, top right, we've got a spike in the spending of some of the older coins, right? So if you look at spent volume age bands, you can see, is it coins that are 1 month old, 6 month old, whatever. So the greater than 6 month older band, that's starting to see some activity. And those are often called the smart money, right? Because they've been in it for longer. They're comfortable with the volatility of Bitcoin. They've been investing in it for a reasonable amount of time. So they're not necessarily going to panic out of it on these sort of short-term fluctuations. But anyway, they are lightening up. You've also got the short-term holder cohort, which is at all-time lows. Okay, it shows that in general, over time, going back through the history of Bitcoin, we've got more and more longer term holders who've been in it for a very, very long time and just hodling it. Okay. Now, the short term cohort, even though they are at a relatively low level compared to history, 82% of the short term holders are currently in an unrealized loss situation. Okay. Which means that if their propensity to kind of stop out is a bit greater, then if we do break below, say, around 36K, then there may well be some capitulation from that cohort that then get flushed out, and we could see an acceleration down towards 30K, which is kind of where we see potentially like an ultimate bottom of this cycle coming in. Yeah. And then the last chart on the bottom right is just the long-term holder market inflation rate. So this is some metrics that they've put out that are trying to compare long-term holders, how much they are adding to their balances of Bitcoin, and how does that compare to the rate of miner issuance. And right now, that's quite a large rate. Like they're adding to their stacks at 7.6 times the rate of miner issuance, which is pretty much near extremes and consistent with bear market lows in price. So that's quite good from a long-term perspective in terms of how comfortable long-term holders are to accumulate and add to their positions on that metric. Now, some of these metrics, they don't all necessarily always confirm each other. Some of them they're analyzing different things and they're trying to kind of just give you pieces of the puzzle, right? But from my perspective, the main takeaway really is that we're seeing a bit of nervousness out of people who've held coins for longer than 6 months. We've got the short-term holders all in the red. There's room for them to puke if the market goes lower. Obviously, on a longer-term basis, seeing some, decent accumulation still out of long-term holders in terms of how much they are adding to their balances. That's good from a longer-term perspective. It tells us very little about the short-term. And then this kind of new accumulation trend indicator is kind of neutral territory to, until that turns into accumulation, nothing really to get excited about right now. That's where I see on chain. So anyway, looking at realized volatility. Realized volatility continues to settle down, kind of come off. It's below implieds now. It's about 10 vols below implieds as the market has been kind of settling and trading in that range. So that's a bit more normal. We've got a bit of volatility risk premium in crypto vol. And then we've got term structure. You can see here, remains inverted, Vega catching a bit of a bid, and then that steady move higher in vols over the week that you can see across all maturities, right? So term structure inverted, but long-term Vega catching a bid as option buyers choose options that don't decay as fast, basically, right? That front end stuff's going to decay quite hard. Longer term stuff, not so much, right? So we're seeing across the curve, we're seeing realized going up, implies going up, even though realized is coming down. And that's because the market's anticipating some movement on the catalyst this week, right? If you look at skew, significant divergence of skew between Bitcoin and Ethereum this week, right? That's probably the most interesting thing. You've seen skew flattening off, going back towards calls on that pop that we got from the Biden report. But then ETH, that skew's going bid for puts. So people are choosing to use Ethereum as their put protection, as their crash protection in crypto. And people are choosing to use calls and stuff in Bitcoin for their bullish trades, basically. And I guess the big reason really being that Bitcoin's got that gold-like store of value property dynamic, which Ethereum doesn't seem to have. So that's kind of creating this divergence in the flows, right? And we can see that in the flows here, where you've had, the 42.50 call spread in April getting bought in decent size. You've had April 60K calls versus May call calendars. So that's the bullish structures that have been going up in reasonable size this week in Bitcoin. And you see a big call, you can see calls dominating the flow in terms of that pie chart. Whereas if you look at Ethereum, we did see a super short-term call buyer in good size at around the 3,000 strike calls end of March. But you got in the April flows, the more longer-term flows, you got put protection being bought in the 2,200 puts and the 2,200 puts, right? So those are the flows that we're seeing. DOVs continue to sell their gamma, but they've been getting soaked up by gamma buyers because there's so much uncertainty out there, right? People don't mind owning a bit of gamma. Markets don't move for 2 days and then boom, they move like 5,000 points on Bitcoin, right? So people are happy. People think there's event risk out there and owning some of that vol makes sense. And, we saw some gamma buying here as well in that yellow area, that super short dated 18th of March stuff, that's also kind of seen a bit of buying flow, hence the curve staying inverted, basically. Thanks for watching, guys. If you like this content, please subscribe to our channel, give the video a thumbs up, and hit the notification bell so you don't miss out on future videos. To watch the entire macro call, which includes the live Q&A and a walkthrough of all my top trades, you can sign up for a free trial to Macro Insight. If you join our exclusive trading community, you'll get access to our Telegram group, and you'll also get weekly market reports summarizing the macro call. The link is in the description to the video. And for more information, you can connect with us on socials, or you can visit our website, options-insight.com. Thanks a lot.